Okay, so if you've been keeping an eye on the market, you've probably seen IREN LTD, right? IREN.
Oh, yeah. Hard to miss.
I mean, the returns have been just breathtaking. We're talking almost an eightfold jump in the last year.
Hit a new high, too, near $70.
Exactly. But here's the thing, the story the market seems to tell itself is it's still just a Bitcoin miner, right? A volatile one at that.
And that's precisely the disconnect. That mislabeling is what we really need to unpack today.
Okay.
Our mission here is to dig into why analysts are calling this a strong buy, setting targets around, what, $75?
75, yeah.
The core idea is, look, IREN's pulled off this huge shift. They're now a high-margin AI cloud provider, basically. And the market, it just hasn't caught up yet.
Yeah.
A big re-rating feels, well, inevitable.
Okay, that pivot, though, it sounds massive.
Yeah.
They're aiming for, what was it, $500 million in annualized AI cloud revenue?
Over $500 million, yeah, by early 2026.
That feels incredibly ambitious. How do we know this isn't just talk? How seriously should we take that?
Well, we take it seriously because they're actually doing it. They're executing. There are clear catalysts.
Like what?
First off, scale.
Yeah.
They just announced this huge deal, $674 million.
Wow.
To basically double their AI cloud fleet. We're talking around 23,000 GPUs. And not just any GPUs, includes NVIDIA's next-gen Blackwell chips.
Getting hold of that kind of hardware right now is, well, it's tough. Which makes their next move pretty interesting, right? The NVIDIA partner.
Exactly. Securing that NVIDIA preferred partner status. That's key. It helps lock down the supply chain, gives them technical credibility.
Okay, but how does a company that was primarily mining suddenly fund all this without, wrecking their finances?
That's where it gets clever. It's what some analysts are calling the dual-engine business model.
Dual engine, okay.
Think of it like two businesses running on the same foundation.
Yeah.
Very synergistic.
Right, let's break that down then. Engine one is the cash engine.
Yep. That's their big Bitcoin mining operation. Huge scale, about 50 exahash per second.
Which is a lot of compute power for crypto. And they sell the Bitcoin straight away, no holding?
Correct. A no-hodl policy. They mine it, they sell it immediately for US dollars. Reliable cash flow.
And that part, the mining, that brought in most of the money last year, right? Like 95%.
Pretty much. Around $484 million in fiscal 25. That immediate cash is crucial.
Because it funds Engine 2, the AI cloud side.
Exactly. Engine 2 is the growth engine, the AI cloud services, built on the same physical infrastructure, same power contracts, but the margins are just phenomenal. Hardware profit margins often over 95%.
95%? Seriously?
Yeah.
Compare that to mining.
Oh, it's night and day. Orders of magnitude better. For every dollar of AI revenue, 95 cents is basically hardware profit.
Okay, now the structural advantage, their moat. Why can they pull off this dual engine thing maybe better than others?
It boils down to two things.
Yeah.
Vertical integration and power. IREN owns its land. It builds and owns its data centers. So no rent payments.
Yeah.
Total control.
And the power.
That's the crown jewel. They've secured almost 3 gigawatts of power contracts. And crucially, at super low costs.
How low are we talking?
Around 0.033 to 0.038 ENS per kilowatt hour. Mostly renewables too, hydro, wind, solar.
Wow. 3.5 cents. When power is the biggest cost?
Yeah.
Yeah, that's a massive competitive edge.
Unbeatable, really. It drives their profitability across both engines.
And the numbers are starting to show it. Revenue shot up, 168% year over year?
Yep, $501 million total in FY25. And they flipped to being profitable, $86.9 million in net income.
So that Bitcoin Cash flywheel is actually working. It's funding the AI expansion.
Right. It minimizes their need to sell stock and dilute shareholders. They did raise capital, but smartly, $875 million through zero-coupon convertible notes. Favorable terms.
Minimal dilution. Okay,
Yeah.
And how does this stack up against competitors like Riot or Marathon?
Riot and Mara, they're still largely Bitcoin miners. Their AI plans are, let's say, more aspirational at this stage. Nascent.
Whereas IREN has actual contracts.
Tangible results.
Yeah.
They've already locked in multi-year deals covering 11,000 GPUs.
Right.
That's about $225 million in annualized AI revenue already secured. It's happening now.
Okay, so summing it up, strong buy thesis, driven by the shift from volatile Bitcoin producer to a diversified AI infrastructure play. The market needs to re-rate them.
That's the core argument, yes.
But there's always a but. What's the main risk we need to keep in mind?
The risk is still linked to that cash engine, engine one.
The Bitcoin mining.
Yeah. Despite the successful pivot so far, mining still brings in over 95% of the current revenue. If Bitcoin prices took a really deep, prolonged dive, that could definitely put pressure on the cash flow they need for the big AI build-out. Execution risk is tied to Bitcoin's price still.
Absolutely. Can't ignore that connection. Okay, but here's a final thought for you, something to really consider. What is IREN's real core asset here? It's not the GPUs, not even the data centers themselves, maybe. It's the power, that owned low-cost power infrastructure.
A foundation.
That gives them this incredible flexibility.
Yeah.
They can point that cheap power towards whatever generates the highest return right now. That looks like AI. Tomorrow, who knows? But they can choose.
That optionality is powerful, makes them far more resilient than a pure-play miner or even a pure-play AI provider renting space and power.
It's an infrastructure play, fundamentally. And, that changes the entire investment perspective. That flexibility makes all the difference.